Hello, everyone. Welcome. Today is June 30th, last day of the month, last day of the quarter. My name is Steve Vetterl. I am the firm's risk manager. Welcome to our midweek software strategy session. If I could please in the chat window, if I can get a yes, I sound okay, and the screen looks good. You can see everything. I have my risk disclosure screen up. Welcome everyone. Now we're having, looks like a lot of the participants have been loading quite slowly today into Zoom. So I wanted to give it a couple of minutes for everybody to get in. So, all right, let's go through the risk disclosure quickly. Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin and utilizing leverage can carry an even higher risk and can lead to a complete loss of investment funds. So do understand that Auvoria Prime is really not have any recommended settings. They're not a financial advisory firm. They just license software the users can use however they want at their own risk and discretion. Some software does come with default settings upon initial setup, which our users have the ability to customize their settings however they want. Now the organization has a number of different FX, I should say a number of many thousands of subscribers that have FX books and do a lot of sharing of those links. That is not necessarily a formal recommendation for myself. So a lot of the other FX books have been floating around. I've got a couple of questions on that. They're nothing that I've recommended. So just keep in mind if you're seeing something and it says something like, hey, Steve recommends this, and it's not the ones we show on the weekend webinar, they're not the correct settings, and I don't endorse those. I have no idea what's going on with those settings. In many cases, they are wrong. So with that being said, Auvoria has nothing to do with a customer's brokerage account. We don't solicit or take investments. We don't recommend any brokers. It's just licensing software and selling amazing education. And that's a quick note to see all the awesome programming and education that is in all of our coaches. And we continue to add coaches to different languages, translating, which is certainly great to see. But we do understand not all of our subscribers speak English. So for those that are joining the call, it looks like the participants have been somewhat slowly loading into Zoom this morning. So hopefully we're all up to. So what I'm going to talk about a little bit today, and for those of you new as subscribers to Auvoria, welcome. I would encourage you to, in most of your calls with your teams, both the uplines and downlines, especially those that have large teams, it is best served if you genuinely highly recommend to your team to watch these calls. You know, we do different things. I've recommended starting watching these calls from day one, but certainly make sure that the May 30th call, where we went into detail, Tyler and myself, on the high volatility settings, which we're currently running with the software. So we are running a demo account for 3K. We're running a live 3K account. I'm running a live 25K account that has conservative settings. All the settings and the links for those are all in my trade tracking channel. If somebody would be kind enough to, on this call, to post a link to my Telegram channel. Again, I sound like a broken record for those who join these calls every week. I apologize, but I think it is critical for the team to subscribe to the trade tracking channels of both myself and Jesse, as well as, at a minimum, the Auvoria Prime official page on Telegram. There's a lot of good stuff that gets announced there in relation to the affiliates. You know, there's obviously an affiliate Telegram link. Make sure everybody's linked up to this and has the app downloaded on their smartphone. If it's accessible in your country, I would highly recommend it. So the questions continue to come in via email, and I would encourage you guys to post the questions in the Q&A window, not the chat window, if you would, please, as we go through this. I'm going to talk a little bit about some of the news events first. Just do understand that developers are trading this week. Some of our accounts are positive this week. Some of our accounts are in a little bit of drawdown this week. And let me just shift the screen over to the Forex calendar for those that did not take a look at the notes in the back office. I always start with the Forex factory calendar. This is most important. You always want to know when these red events are coming up. Even though the software is set default settings to stay off trading in some cases for this and or alerts, I still think it's wise to be in the know on what's going on globally. So as central banks continue to pour bailout funds into capital markets around the world, we have seen a fairly sizable levitation off of the lows that occurred in most global markets at the bottom of March. That continues to be the case going forward. Do understand that every first Friday of the month, which is a little bit different this week because of the observed holiday of July 4th, if it falls on a weekend, there's always a weekday that it is observed as a formal holiday in the U.S., and that's Friday. So July 3rd is Friday. Obviously, markets, bank holidays close, all exchanges. Not much probably going on in any arena in the futures markets that are partially open for a part of the day on Friday and then close. So the day before is the non-farm payrolls. This is the largest news event typically, although you wouldn't think that would be the case this year. We've had a lot of larger news events. But normally this creates a lot of volatility, okay? So how much any country has in terms of employment growth, or in this case, a lot of unemployment growth due to the C-19 crap going on, and obviously a little bit of the cases, I guess, have gone up. But the interesting thing is I ask all of my clients and friends, and we were just at a huge family event this past weekend out in Lake Havasu, Arizona. And not one person of the 70 people that were at this party, nobody knows anybody that's got C-19. It's crazy. So I'm not sure, not sure who's getting sick according to the news. In any case, I digress. So looking at the non-farm employment change or the non-farm payroll, what we consider to be NFP, this comes out. I would not, even with any kind of Thursday trading, I know a lot like to trade through news. I just don't recommend doing this. I do not do it. So looking also at, since this morning, actually, you know what? I have this set on East Coast time here. So we probably, just take a quick look at something. This is just a chart of the S&P in candle form. I think we've probably just been getting past all the normal stuff. I haven't paid attention too much this morning as to what Chairman Powell's been saying, but this is a big event. Obviously, the ADP non-farm. So most of this week related to the U.S. dollar. It's a very treacherous week. As I posted in the notes over the weekend, I have been away on vacation, but I think it's important to understand that when you have any kind of red folders in front of, and again, we're looking at New York time here, 1 p.m. Eastern time, just to know when these events come up. If you're accepting trades and you're fairly new and the markets have been volatile, a really conservative way to go about this is just not to accept any trades that may come out around these periods of time. I continue to see people forget about this, and it is probably one of the bigger reasons that any account goes into a drawdown-based position is because of, obviously we've seen some just loony moves in currencies this year. And that's to be expected as money supply is changing, right? The devaluing or the revaluation of any company's or any country's currency has been related a lot to money supply flows, which have been kind of crazy. So what else do I want to say related to this? One thing I think that's of note for those that do not follow the US-based stock market, that's fine. I always make comments on this because I think the level of the S&P 500 should always be understood in relation to how it affects the currency markets. But we had up here, which arguably was a 4-day island that was formed up here in the markets, which in many cases can lead to a reversal depending on the volume that came. Then we had obviously a big reversal due to a whole number of factors 2 weeks ago. But since then, we've been trading in a range. So, I mean, we're obviously bounced a whole bunch of times off of 3,000. That's where I put the line right there. That is currently the big level of support. So should we drop below that line, which we've tested it more than a couple of times, and even though potentially there's increasing cases in this country, as many states have been opening back up, we still haven't broken this level. And I think because of that, the market's gotten a whiff of additional stimulus packages, which some say we need, some say we don't. I hold no opinion on it because I haven't seen any numbers yet, because Q2 just ended. So we're going to start to see a lot of corporate earnings coming through. And then we'll really, truly understand what is going on as far as the earnings capacity of a lot of some of the biggest companies in the country. And that's going to be a huge tell for a lot of stuff. A huge tell for bailouts, a huge tell for flow of volumes, certainly a huge tell as maybe a wagger of the dog in the currency markets. So just keep an eye on the S&P, although you may not necessarily be a lover of technical analysis. I think if we get back down to a fairly critical juncture here and start to drift lower, I think that's going to motivate a lot of central banks, depending on when their country's equity markets are flowing, which most of them trail what's going on in the U.S., any more bailouts. And if that does in fact happen, I can guarantee you some whippy volatility is going to be coming back into currencies. So that being said, for those again are looking for what's going on inside of the big account that's denominated in euros, here's a 25 grand account. Again, settings for this are on my channel. This is the live account. This account is trading 0.01 per 3K with volatility settings. So far this week, it's up about 0.5%, plus 1.8 so far for the month. Not the greatest return, but again, we're not concerned because the account's not in drawdown. This account, for those that have not seen this before, this account is set across all three pairs that we trade of the Euro Ring, US dollar, Japan, to be able to withstand almost 1,000 pips in movement. So we're okay with the super conservative settings on this account right now. This account's currently in drawdown. So we're just looking to let it breathe, so to speak, and sort of claw its way out of the little teeny movement down that it's suffering right now. I'll tell you, the interesting thing about a lot of the questions I get, I don't really get a lot of questions related to analysis. And I think I try to want to get you guys to shift your thinking towards more of analysis. And I get it if you don't have a lot of gains in some accounts because it has been so bananas the last quarter in the currency markets. But I still think it's important to understand how effective analysis can be as far as not only education, but just certainly understanding what's going on, at least from the most basic macro level at the high end of the spectrum. So, and the reason I say that is if you take a close look at what's going on in the different analysis, let me just make sure this is sharing. So you guys should be able to see my FX book. Okay, cool. All right, so looking at the numbers, I only pay attention to from just a very generic quick peek of what's going on in any account I look at. I always look at the win rate. I was looking at how many trades have traded. Not the largest sample size at this point, right? Trading on a daily time frame for this particular Einstein software that's running. But I think it's important because if you look over at a lot of the questions that I'll sometimes post, I've seen a lot related to just how to deal with performance. So I try with our teams, and I know some of the more successful teams have been very successful in encouraging people to get out of the market and just take what the market has given them this far. So even if it's something as minor as this 1.18%, which isn't that great, or this week, clawing out a little bit of profit, even the account's kind of in a little drawdown right now, is considered a win. and, essentially stop accepting trades, when they get out of the next trade sequence. You can always turn a pair off in Einstein. You could drop down to 2 pairs from 3. I think the problem is even though you have the flexibility to turn off those pairs, and here we're just looking inside the other live account here on the MT4 platform on my screen now. This is our small live account, and this account is trading the 3-ring pair using the conservative settings. For those that do not know what they are and have not looked at my Telegram channel, these are the conservative settings. Okay, so we have the trailing equity, so forth, all the way down. And yes, with a lot of questions I've gotten, that 250 pip stop loss still continues with us. Stop trading before news is 15. Gotten a lot of questions on that. You can adjust these to however you want, guys. Do keep in mind that we don't start trading until 2 hours after the market opens on Sunday. Okay. So Monday, hour 1 is when we choose to have our, many of our settings for the accounts that I'm managing open up. I don't like trading the opening of the currency markets. It's typically too crazy. That's usually when everything gets settled out of all the weekend jibber jabber that's going on throughout the U.S., the Eurozone, parts of Asia, in terms of what's going on in any sort of big events, Brexit, so forth. All the different central banks I've been squawking about for 3 months now, just running bailouts and continuing to toe the company line on propping up capital markets and going through orderly flow. So I choose to, I know you can set these at wherever you want as far as the news settings, but there usually isn't that much going on 15 minutes before. And if you want to be really conservative, you could set it for 60 minutes after, 120 minutes after, something like that, in relation to large news stories. So something else that's been helpful for, again, some of the more successful groups inside of Auvoria Prime that I've been observing, is reminding the subscribers that when they approve a trade in Alexander, that they're approving a sequence of positions, not just a level 0, right? So if we're looking at the max number of levels number here, which is 8, do understand when you approve a trade, you're approving a whole sequence, okay? In this case, 8 levels, including 0. So you're approving 9 levels of trades. And, some of them can really take the accounts to the moon, which is obviously great. We've certainly seen that a lot before in the past. But the opposite can also happen. And it could take the account down into drawdown. So, and I continue to get this question literally every week. And I think what I'm going to do is for those that have the ability to do it, or if you want, you can sort of raise your hand in the chat window and say, yeah, I do have the time to pay attention to it. I do want to learn more. We can certainly talk more about, maybe closing out part of it. I think the problem I have with broadcasting to the masses about a very specific strategy is I feel personally it has a tendency to open up Pandora's box. Okay. So essentially it's going in, even though I've heard all the arguments, but essentially it's going in and saying, I'm smarter than the software. I'm willing to step in front of it. I would rather have conservative settings and be able to take a huge rubber band stretch on the account than running in there and trying to turn off part of a sequence or waiting until a sequence completes, turning off a pair, turning back on the other half of the sequence. I choose not to do it. And by the way, guys, I don't do that in any of the accounts that I manage. I let them run. Why? Because I've seen the numbers over the last year. I've seen the metrics. Now, if I had a lot more time, I can tell you this. I probably would occasionally go in and do that. But I would rather focus on trying to get a small return, 1 or 2% a week, turn it off, and be happy with it. So most of what we see are problems related to the software are people, number one, by far, they're not paying attention to these calls. That is so far above any other one in terms of importance that it's up in the moon in outer space. And people just need to watch these calls, number one. Two, they don't understand the settings. In many cases, they've been given settings by the up or down line that have been incorrect. Okay? Big no-no, in my opinion. We don't do it with our team. So our teams, which is almost 100 people, they are very, very clear on what's going on. And the team leader, Ryan Doctorzik, one of our global directors, I mean, he is just all over it as far as the settings. And I think it's important for the team to understand where the settings should be right now. We're currently running the conservative volatile settings, which essentially is just a flip-flop of the range multiplier here and the position size multiplier, right? Just allowing the net, as I often refer to it, of the trade sequences to be cast wider, giving it more room to deal with volatility. And I know that may seem counterintuitive to a lot of people because I get a lot of questions about hedging. You technically are hedging slightly when you have a sequence that completes itself and then starts to take the other side of the sequence, okay? But you are hedging just in the fact that if you have a larger account, you're trading 3 currencies or more. You are hedging just in the fact that you flip the position size in the range multipliers and you are using conservative settings, okay? There is hedging that's involved there. Because I get a lot of people say, well, why isn't this a trend following software? And it isn't. It's a martingale-based system. We are going to have other products coming out that are trend-based. But honestly, there isn't really any trends in currency markets right now if you look at daily charts. I mean, it's all over the place. In some of them, there's a trend going on for a few days, and then it breaks and just whips back up to a particular range, high or low, of wherever it's been bouncing or ranges that it's been trading in between. But essentially, there really is hedging going on inside of the software just from the simple fact that you're stop trading for news, right? Or that you let it start trading right after the market's open, a couple hours. So those are all, because really hedging is nothing more than doing something else that's uncorrelated to a particular trade strategy to reduce risk. So I think that if we can just communicate, if you have people that you talk with in your upline, downline, for a fact that they just aren't in the, maybe they don't have the time to watch these weekly calls, then the conversations you should have with your groups should go something like this. Hey, how did everybody's settings look like this week? What did you guys do? Was there anybody that's willing to raise their hand that had settings as an outlier to what our group's talking about or what Steve's saying on these weekly calls, right? Inevitably, you're going to get a few that were willing to go outside the box just to make sure they understand what they're doing and they've gone through things like the basic Forex education course, or they've gone through, some of the coaching calls on Iris or some of the other products we're going to be coming out with. So I've been quite privy, as I've mentioned a little bit, to have been peeking inside what's going on inside all of these beta test groups. And I'll tell you guys, there's some exciting stuff in there. But like anything else, with me at least, it's got to be a duration of data that is lengthy. Back testing is fantastic, and it certainly can help dial in a particular strategy or hone some of the components and the changes of, or the multiple pieces that encompass that strategy. But in many, many cases, the back testing, depending on where you're getting the data from, it's not as effective as real market stuff. So, running it in live conditions without lots of disruptions, without lots of changes to the settings all over the place, right? So for those of you out there that say, well, Steve, hey, that's great and all, but, I don't want to go that route, that's okay. I just say, as long as you understand what you're doing, you can bypass what I'm talking about. But I can tell you, for the other 99% of the subscribers, in many cases that have never traded before, it is going to be absolutely critical to go through my Telegram channel, to watch these calls every week, to make sure Just like in our group, I mean, heck, we've got well over 80 people in the group that just have no experience in trading, right? So, I mean, that's just a Pandora's box as we start getting into changing settings and this and that. And, just stick with what works. Yes, there will be different pairs we come out and trade with to all subscribers. There will be different pieces of software. And you'll have more opportunity to trade with different types of systems. Some will be trade based, some will be trend based systems, which can have their day in the sun. But the beauty of a martingale system, just with all the sequences that get put in place, whether you're accepting trades with Einstein or Alexander, is that it takes essentially a larger trade level, keeps putting on a little bit more risk each time, because inevitably markets will snap back. Now, the problem is they haven't snapped back quick enough for a lot of subscribers, and it's important to develop that patience. I know there are many people that have no patience, and they'll let something go and not do well over the course of a month, and they'll completely abandon it. And that's just so foreign to me, because I think long term, I think you're really doing yourself a disservice if you were to look, heck, if it was even a quarter, which has been a pretty rotten quarter, right? In many respects, not just trading. So to go out and form an opinion that, hey, this doesn't work or this is not for me, I think you're doing yourself a disservice. Focus more on the long term. Focus more on understanding settings, making sure the settings are conservative, not aggressive. If you're wanting to, or you have large amounts of capital, hey, more power to you. I congratulate you on the success. But that doesn't mean you want to go out and start putting crazy settings on your account, listening to people in your up and down line have no real long-term Forex trading experience. Okay? So that's just my warnings to everybody, because I'm seeing a lot of this in common themes to the questions and so forth. All right, so let's take a look at the other account here. This is our demo, sort of like we're just kind of like poking through and checking it out account. It's running a different pair. Okay, this is based on other data. This account, has a wider stop loss in pips. It's over 400 pips. A lot of the other settings are pretty much the same. But if you look at the range multiplier here, we have it at 1.35. If you look at the position size multiplier, we have it at 1.15. It's the same as the live account that I just clicked over on the other page. Okay. The only difference between these is we have cast a much wider net, because these other currencies that you see here, the NZD, US dollar, GBP, CAD ring has a much wider movement in the pips. So I think I covered everything. Forex, S&P technicals, the large accounts, too small. One other thing I want to note before I open it up to some Q&A we'll go through is just a quick discussion on performance. Okay, so I've seen a large amount recently of people that have a 2% week as an example. Okay, and why wouldn't you just close out and be happy with what you got? Okay, and they'll say, well, I wasn't. So think about this. Take the account times 10. Okay, so if you have an account that's $1,000, and you got 2% that week, and you only made $20, doesn't sound like a lot, right? What if you had a $10,000 account and made $200? What if you had a 4% week, you made $400? And a lot of people would say, especially in some other countries, where that's a lot of money, that would be fantastic. So why would you step in front of that strategy and restart the software again when you know, especially this week, it's going to be more volatile? So I think if you sort of play devil's advocate with yourself, maybe look at a larger size account, I think it could be more helpful for you in sort of building that psyche of, be sort of happy with the smaller amounts. At some point we'll have software out that may be trading on a much smaller time frame, maybe a 1 minute chart, maybe 15, maybe a 60. I've seen all this in action right now. Many of these accounts are churning out some fantastic numbers, but we don't have a lot of long-term data on it. Okay, so it's dangerous for us to be releasing stuff like that without a significant amount of back testing and obviously live testing, which is currently going on. So I'd say please have some patience on that. Again, this company's barely 3 months old. So as an organization, we're brand new. But all right, so yeah, and I'll tell you, Kyle, this is a great point you bring up. So for a lot of people need to make more so they can cover the $180 a month the cost to pay for Einstein, though. I think that is bad messaging to your team. Now, I know that's going to shake a lot of feathers. I'll probably get lots of PMs. I don't care because I think if you're selling that way, you're marketing it wrong. You have to, I get it. It's a lot of money in some other countries. I do understand that. But I think it's important for the expectations to be properly set that, hey, until you find 3 people, which is difficult to do, you're going to need to pay this cost. If you cannot afford this, then you're going to need to come back to us at some point when you can. Okay? So just like Mercedes or BMW do not market to Hyundai customers, I feel that it's important to set proper expectations with your team. There is no one in our team that has an expectation set to them any different than that. Mostly it's because I've essentially forced this kind of communication on the team. So they are crystal clear when they come in. If they do not have the money to support the software for a period of 4 to 6 months, don't join, or come back and join us when you can. Now, if we do come out with other software in the meantime that has better short-term performance trades on a shorter time frame, which I inevitably believe we will have, call those people back up again. Say, hey, we've got something that may have the potential to help pay for. Don't ever set the expectation that it'll pay for the whole thing. And I know it's more difficult to recruit that way, so you just have to start recruiting to a larger group, in my opinion. So I do not agree with that question. Just remember that. Courtney, why would you choose not to hedge when you could put the settings back on to allow hedging? Trend levels before hedge equal 9 and max number levels equal 8. Not sure I understand the question, Courtney. Why would you choose not to hedge when you can put the settings back on to allow hedging? I don't know. I'm not sure. I mean, you have a lot of people that think they're smarter than the software out there, and heck, there are some out there like Jesse and a number of other ones that are really intelligent traders. They're even having a tough time during this period, right? So, if you have your stop trading before set at 15 and start trading after set at 30, why would the software send trades for you to accept during that time? Well, a lot of times, Nan, you have old settings in people's Alexander that have been unapproved. They're still sitting there, so I usually just delete them out around that. By the way, that's set at 60 when to start afternoons, not 30. You said don't accept trades during the news events. Why would the software send those if the variable sets the same news before? Well, it wouldn't. As far as the you can post chat if you guys want in the chat window, but for the Q&A, if you could just post them in the Q&A, it would be cool to have a demo account without the need of a monthly payment. Because for people that don't have much capital at risk, a fee of $100 is really high. So obviously, Leo, you're marketing to the wrong group, in my opinion. So if they can't afford the $189 a month, they're going to have to come back, or we're going to have to release a product that's a little bit less. And that's certainly, there's a potential for that around the corner. It really boils down to just not being able to afford it. The other problem with that is, think about this. If they can't afford to pay the $189 fee, what are they going to fund the live account with? Think about that. Let me read this next one here. So we were supposed to turn off auto trade before. No. I'm not suggesting that at all. I'm just let the software do what it's supposed to do. What I have been, and I'll tell you guys this, I've been fighting this. Okay, what I have been told by a lot of directors is, hey, you need to teach people how to turn off part of their sequence that's formed, or essentially turn it off so it doesn't keep taking more sequence trades. That to me seems counterintuitive. So I understand how that certainly can be done by an expert trader, and that's fine, because they understand what kind of drawdown they have, willing to risk. It's live money in many cases, and that's fine. But for somebody that does not understand how to use the software, for me to start stepping in and getting into a fairly sophisticated discussion of when to turn on and off a sequence, it's going to blow everybody's head off, and they're not going to understand what's going on. And I think it'd be dangerous, right? It would be far more educational for me to be behind the mic, right? And just focusing on conservative settings and not taking risk with capital you can ill afford to lose, than getting in and start digging apart in the software of when to turn things off and on. I just, at this point, for the large subscriber base, my role essentially is to help protect your accounts, essentially the risk manager role, right? Don't know that that's necessarily a good risk management. That's actually a good question, Anonymous. You're going to have to ask Jesse that. Okay? So he has a Facebook page. If you want to ping him, dial him up. Is there any potential to have Alexander Einstein solve most of pursues? Yeah, I don't know the answer to that, Sean. Okay, so get in touch with your global director. I don't know what Sal and the team's planning to do. I sincerely doubt that. So we're supposed to, let's see, Anonymous, it just depends. So where you are, just let the software carry on trading for the rest of the week. It depends on what you have set. I don't know if you have Einstein or Alexander. But the settings, I don't know if you've looked at the bottom here. Okay. This is not the settings. We'll switch over actually to this one. Okay. So this account is set to turn off. Okay. Just so we're clear on this. Get back up to trailing equity. So we're selected trailing equity, so fixed weekly goal doesn't work, right? It only works if you fix weekly goal. Once the account gets up 2%, it triggers to start to trail by 1. So if it dropped that to 1%, it would close out. So the closeout trail day is Friday. Okay. So if you're in a positive return in the software, the way that we have the settings adjusted now is to close it out on Friday. Okay. Because if you're trailing by 1%, essentially you've got a protection level in theory set in place in the account. So why not just continue to let it trade to potentially get more up, whereas if it falls back by 1%. So again, questions are related to me wanting to, for many that have sent on the, and I don't know if everybody on the call, I would probably pay attention. Telegram's got a very active affiliates channel on performance. I try to read every post, and in many cases, they'll post their settings. And some of them, they do make the disclaimer that they're going outside of the recommended settings from me, and they're essentially changing the settings around to their own, which is fine if they understand what they're doing. But, there's a lot of successful posts just in the last couple of weeks on that I would take a look at. I have my settings at 2% on Alexander. I was under the belief that I accept trade or decline. I am keeping it simple. Is that a good idea? Yes, it is. Beginner question, how do you turn off or remove a pair? Couldn't figure it out. All right, so See this button right here? It says auto trading. You just click it, turns it off. And honestly, what I probably would do as well, since you don't know how to turn off or remove a pair, is to go into the videos in the back office that explain the software, and just make sure you go through those videos. For those of you that don't understand or haven't spent much time in the back office, and we even have some of the folks in our team that can be certainly accused of that, this is what the back office looks like. So when you're inside back office, if you want to see any of the videos that we post, just go down to the resources tab right here, a little bit down the page. You click on Alexander and Einstein, okay, and then the forecast trade week, which is Saturday, or the midweek software strategy session, which is today. All of the recordings are in here. You can see the different dates. Do make sure, as I think this is important, if we go back to this is the big one here that I think everybody should watch. Okay. This is a video overview of it. This is May 30th. This is where we announced the software conservative settings. We call it high volatility settings. I would highly suggest watching this 10 times if you need to. TDD for, so I'm not sure what that question's about. Might want to elaborate on that. You just posted 3 pairs. Percentages, not sure what you're talking about. So should I set our trailing equity? So should I set our trail equity at the profit I've made at that point before the non-perm so that it can trigger the trail equity buy and protect? Yes, I would do that. You know, a lot of these questions I've noticed, not necessarily today, but in past weeks, I think people have a tendency to just want to make this a lot more confusing than it is. So when you're looking at the settings, it's really this simple, guys. If you have trailing equity selected, pay attention to this line and the trail equity buy. The trail equity doesn't get triggered until, in this particular case, the count goes up over 2%. Once it goes up over 2%, the 2%, or I should say the whole feature gets kicked on, right? It comes live, it's active, whatever you want to call it. And then it starts to trail by 1%. So if it drops back to only up 1%, you're out. And from what I understand, I haven't had a chance to talk to the developers because one of them was on a road trip and I was away. So I'm planning to have a follow-up call with the developers a little later this week on a couple of the things we're talking about. I'll make sure I get addressed, unless some of our directors know what's going on more with me, more with them, in terms of some of the new features that we've asked them to implement. I don't know where we stand on all of that release, but I'll get updated on that later this week because I know one of the people had sent me a question on that. To run different accounts on the software, do we have to purchase separate VPS accounts? For example, 1 demo, 1 live equals 2 VPS. So that question was addressed in detail in the back office. Again, you can go back and see like the news events. Usually just go to the dashboard here, go through the news events. Now keep in mind, my back office does not look like everybody else's back office because I have multiple subscriptions hooked up to it, different stuff. So you can just go in here and click. Also, once you click inside the software that you're choosing, you can actually see the Telegram channel for it as well. Here's the Alexander and Einstein onboarding, setting up the software, going through the overview. So make sure you guys have gone through, especially the realistic expectations and all the stuff. This is actually really good stuff on both pieces. You know, you're going to see a lot of redundancy between the two, but key thing is just keep the settings And see, they've even started to translate it into German and a couple other languages, which is good to see. Not a question, but this is my 5th week, and so far I'm up 15% total. So I'm pretty happy with the performance of high volatility settings on Einstein. I mean, the reason we did that is because their potential for profit is almost the same, not quite almost the same, but there's less risk. So thank you for that. Is there any documentation we can look at that describes each setting and the effect it has on the trades? There's a lot of documentation on that. If you have not, Anonymous, I would jump over to Jesse's channel, where Jesse does just a massive deep dive on mostly settings related to just the GBP NZD pair that he trades singularly in most of his accounts. And a lot of that is the same type of documentation that covers all 25 pairs. All right, so. All right, cool. So everybody hopefully has the back office down. Make sure you go through those videos. I also want to note, do know also these promotions, guys. This ends July 4th. This is a pretty good deal if you're looking to bring in some peeps on, I can't get this to scroll. There we go. $199 versus basically a $68 discount. This is a big deal, you guys. We've actually had a lot of people come in our group just in the last couple of weeks just because of this. This is great. So it's going to end soon. Take advantage of it. What else do I want to address? So as you can see on the live account here, just start up at the top, we set this thing back up on the 1st of June. So it really hasn't been running that long. And the accounts is knocked out about, $236 in profit. I mean, it is in drawdown right now, but we're hoping to pull out of that. Also, gotten a lot of questions recently about the Euro JPY pair, and I don't have any long-term FX accounts opened up. But if you look on some of the past videos I've shot, you'll see I was showing some long-term accounts. I hesitate to do that because, one, they're sort of on the edge of compliance. I want to make sure you're not really trying to show stuff that were previous iterations of Alexander and Einstein. But the important thing is the software hasn't changed that dramatically in what it does over the last year. What has changed is the settings related to, parameters that it's using to hunt for trades. Okay, the basic core strategy of the overall or the macro hunting for trades plan hasn't changed. But the settings certainly in some cases have changed dramatically. But the important thing is that it's effective for the long term. It's not as effective, obviously, in volatile periods of time. But then again, I've yet to see software over a long period of time. We're talking like 5-10 years of data that hasn't occasionally gotten whipped around by craziness in the currency markets. So just know that there's nothing out there, the exception of maybe a couple of systems some big funds are running. I've had the luxury to see over the last couple of months, that have very low drawdown. But at the same time, most of those ones that have very low drawdown, they're not out there trying to shoot the lights out in the market as far as trading. Many of some of the biggest ones I've looked at, and these are expert advisors I'd never be able to get my hands on for a variety of reasons, mostly proprietary stuff. Many of them have just, they've done really well, but they've still only done about 4 or 5% a month, guys. Many of these are trading bigger, much, much bigger, in most cases 7-figure or larger accounts. But everybody I've talked to with some of these EAs out there, especially the big stuff, these guys are peached with 4 or 5% a month, right? Think about 4 or 5% a month on $1 million. Would you be happy with that? Overwhelmingly, the answer from everybody is yes. So just think about that and allow that to sort of grow your accounts. Would you be happy with 4 or 5% a month on 100K? Think about that. That's 4 or 5 G's a month. That's a lot. That's more than a lot of people earn every month across this planet. Probably the overwhelming percentage of people on this planet. It's 7 billion people on the planet right now. They all earn less than 4 or 5 grand a month. So if you can get to that, especially the affiliate side of this business, where there's massive payoffs we've seen already, you can certainly do well with the software trading all your affiliate income. So Jesse's channel, Hendrik, is, let's see if I can post that. Problem I always have in Telegram is finding the damn invitations. All right, so let's go up here. I always say view channel info, right? Click on. See, that's the problem. I don't know how to get in there and do that. Somebody wants to post a link to Jesse's channel. That would be quite helpful. I can never seem to figure out how to do that. It seems to me with these damn channels, we should have the ability to just click on the title. Like if you click on Trade Tracker with Steve Vetterl, and right underneath that, you have to go into Manage Channel to find the invite link, right? And with a lot of other channels, I can't. It's weird how sometimes you can see the invite link and sometimes you can't. All right, so I think I've covered everything I want to say. And it's a big theme this week. If you've done really well and you re-enter the market, we have no sympathy for you if you completely erase your return. Be happy. All right, cool. Coming up an hour, guys. I got to get to work with some clients. Thank you, everybody, for joining. The Auvoria Prime team does care about your success. So I think it's important to keep communicating, to join these calls. Again, if you have any questions, you guys can always send me an email, svetterl, V-E-T-T-O-R-E-L, at AuvoriaPrime.com. 2 things I need. Got to have a link to your FX book unlocked. And secondly, I have to have a screenshot of your settings. Please make sure you word your questions so that I can understand what you're saying. And with that, today again is the 30th of June, last day of the month. Hope everybody has a fantastic end of the second quarter. Get ready for Q3 starting tomorrow. That's going to be probably another nutty quarter. So for those of you in the U.S., happy 4th of July weekend. I am Steve Vetterl, off the mic.